Inflation is now nearly zero under Donald Trump, down from 5.7% annualized in Joe Biden's final inflation report. It's one heck of a move in 2 months. What is driving it? So last month, the Bureau of Labor Statistics dropped new inflation numbers for the month of March, as in before the tariffs. This was Trump's second inflation report card, and it was even better than the first. Overall, inflation actually dropped on the month thanks to crashing energy prices, and even core inflation, which excludes energy, came in at an annualized rate of just 0.7%. That brought year-on-year inflation down to 2.4 from 2.8 the previous month, and it brings Trump's average inflation rate to 1% even, compared to Biden's final number of 5.7. Meanwhile, new producer prices also came in. These measures what companies pay, at a 4-year low, also with a monthly decline and a 0.7 annualized on core. Now that's down from 20% annualized in Biden's final number. Rarely has inflation dropped so hard so fast, so what did it? Energy was the star, dropping 2.5% on the month. That's a 1/4 drop annualized. Gasoline actually dropped over 6% in a single month. There were some other drops in medical, pharmaceuticals, and travel, along with a pleasing drop in used car prices. I've been using those as a proxy for self-deportation since departing illegals flood the used car market, and they dropped about 0.7% on the month, which is about 9% annualized, a decent clip. The rest of it was a mixed bag. Flat for shelter, houses, and rent. Prices fell for fruits, vegetables, and bread, but rose for meat and eggs. This was before Trump brought down egg prices with one cool trick of stop killing chickens, so it was mainly energy. Now that's a combination of increased production here and overseas, along with slowing economic growth in China even before the tariffs. I mentioned in recent videos how China's economy has been in trouble from overcapacity and mountains of bad debt, which is part of why Trump's trade war is hitting them so hard. So what's next? Brought to you by OnChain.com. March was the last inflation number before Trump's big tariffs. Even after he trimmed most of the tariffs to 10%, China is still facing a 125% tariff wall. So in the near term, this will hit everything where Chinese imports are a big share. Trump exempted cell phones, computers, and semiconductors, which are about a third of Chinese imports. That leaves clothes and toys, furniture and household goods, construction materials, tools, manufacturing inputs from chemicals to batteries. These come to about $350 billion, possibly $500 billion once you include re-exports of Chinese goods through Vietnam and Mexico. So that would in theory be a point or two one-time hit to inflation. But of course, if Chinese socks or electric drills are twice the price of India, the inflation's a lot lower. Importers just change countries. That means that near term, tariffs are probably a couple tenths of a percent on inflation. How long depends how fast importers can switch to other countries, how much inventory they have in the meantime, and how quickly domestic replacement can stand up new factories when and if the tariff dust settles. That all brings us back to what is fundamentally driving both inflation and reindustrialization: federal spending, the red tape and taxes that come along for the ride. If Trump and Congress can fix that, inflation will stay low even with jumbo tariffs, while Americans can start making stuff again. Okay, we'll be watching. See you next time.